But yeah, I keep it very simple. It's not something that, there's no secret to it. Anyone could learn what I do. Dead simple.
Welcome back, everyone. So today I'm sitting down with Jason Sen. Jason is someone I've interviewed a few times here on the podcast and the YouTube channel. We just hit 100,000 subscribers on YouTube, which is a good milestone. I want to bring you back to kind of share some thoughts, also celebrate for this big milestones we've hit, and looking forward to chat trading again.
Yeah, congratulations on your big achievement.
Thank you very much. I appreciate it. So I don't want you to introduce yourself because you've been here multiple times. People know who you are, I think. They should be at that point. I'll leave our interviews link in the corner here that people can watch if they want to learn more about you. But let's begin with what's new with you since we last spoke?
Well, I'm continuing just with my technical analysis signal service. That's going quite well, growing the numbers. Actually, this is something I want to talk to you about. You can help me maybe. I've been working with my business partner to try and build a bot, but I must admit we're really struggling with it. So that's quite a challenge. And markets have certainly been challenging as well with what's going on with the banking crisis, interest rates. So stock markets all over the place. I think some trading conditions are a little bit more difficult than they were last year.
It's the thing I see a lot with the traders who are performing well over time is that they know how to adapt to different conditions in the market. And I know you did a video in the past where you kind of share how you look at the market, what things you look at to trade. But how do you adapt when the market changes? What are some things you look at to define whether it's changing or not?
Yeah, good question. Well, yeah, as you say, you've got to adapt quickly. And one thing that I try to remember is that markets trade sideways for longer periods of time often than they move, in an upward or downward trends. People forget that. I think people think about financial markets, they think, well, they're either going to go up or they're either going to go down. But of course, we spend long periods of time in sideways trends. But the problem is, of course, you don't know that you're in a sideways trend until maybe 2 weeks or so before you start. Then you can kind of draw some trend lines and get some parameters and realize, okay, maybe we're going to trade sideways. I did actually say to my subscribers about a month or two ago that I think we're probably going to trade sideways through the summer, which we are doing, but I will admit I'm struggling with it because, well, we've got this crazy volatility as a result of the banking crisis. Speculation over interest rates now has changed a lot from looking at higher for longer, as the Fed said, and now of course we could be seeing rate cuts. Maybe by the time this goes out, we could be having rate cuts. Yeah. It's very difficult to adapt, and you have to be aware that when conditions are volatile like this, you've obviously got to be careful, keep your stops tight, and make sure you don't lose too much money. That's key for me at times like this when it's so unpredictable.
Is sideways versus trending the only thing you look at for how it changes, or are there other factors like volatility, like other things you look at to find a change?
I'm primarily focused on the trend change because I'm a trend follower. Mm-hmm. Now, that's what's key to me. I mean, I'm a lazy trader, really. So if I can find a bull trend, that's what I like to do because it's just easy. You buy it, you take some profit, you hopefully buy again when it hits a support level, or you break a buy above a resistance level and you go with it. For me, that's easier. It's a lazier way of trading. When we're in a sideways trend, you've got to be more active, take your profit a bit quicker, and react to the way the market moves. Literally, the stock markets at the moment, they're up one day, down the next, and moving 2% in a matter of hours. So, you have to really adapt. And I think that's a difficulty, especially for new traders. You can trade one way, but it's difficult to then learn to trade in a completely different way. But you have to, because we could trade sideways now for several months.
And like you said, it's a lot about kind of trying to avoid losing when you're not performing well. Like some periods you're doing really good, and then you can kind of make the most of it. But other times you're going to be losing more, or you're going to be in the tough periods. Then you have to be finding ways to reduce your losses at least. Yeah,
that's a really good point. I think you almost have to be prepared not to trade. If you really don't understand what's going on, if you're really not sure, there's nothing wrong, sit on your hands, take a step back, and then wait until you feel confident again. Because as you say, the worst thing is, you blow a load of profit. You're in a much better position if you're not making money rather than blowing, some money that you've made recently. I'm in a lucky position where I don't need to trade for a living now because I'm such an old guy. But so when I really don't know what's going on, I actually just stop trading completely.
Yeah, I was going to ask you, what makes you understand that you should not be trading right now? Is it based on the fundamentals you hear? Is it based on how the market looks? Is it based on having like a few losses in a row and then you stop trading? Or what gives you the clue?
Another good question. I do definitely study the fundamentals. I mean, I'm always on Twitter or whatever, watching news channels and newspapers, but I don't base my trading decisions on that purely because I'm a short-term trader. So I'm interested in what's going to happen over the next few hours, not really what's going to happen over the next few days or weeks. So whilst I'm aware of the fundamentals, I don't base my trades on them. I will be purely a technical trader. And I suppose trend lines, the quickest way. Well, moving averages actually, short-term moving averages, when they start flatlining, that's one of the early indicators that I use to sort of focus on the fact that we're trading sideways now.
So that would be like on a bigger time frame. So you look at the moving averages on the bigger time frame for your lower time frame trading.
Probably focus mostly on the 4-hour chart. Okay. Because I'm trading on for my signal service, I'm looking at a 24-hour period, maybe a 48-hour period. I think moving averages on the 4-hour chart would be the key, and particularly when they start a flat line and then the price is ignoring them basically. Yeah. In a trend, the price will often use the moving averages as support or resistance levels, and when they start to ignore the moving averages, that's another sign to me that hey, things are breaking down here and we're just chopping sideways.
Interesting. One thing we discussed last time was you were trying to do a funded account or a prop firm challenge.
Yeah.
How's that been going?
Not well. Okay. So it was frustrating actually, and I want to talk a bit more about this because I need to get back into it. But I did a challenge, and unfortunately, it was one day when I overran the downside parameter. I overran my maximum loss for the day, which is annoying because I hit the target. But anyway, that was it. And I haven't tried since. I think that was at the end of last year, and I've been busy this year. But I want to get into it. And funnily enough, I was actually looking at the offering that you have, the funded trader account. It's interesting because you don't have a time limit, do you?
Yeah.
Yeah, and I think you're one of the first people to offer that.
Yeah, which is what kind of company were you with the other account?
I think I did it with FTMO.
FTMO, yeah. And this is a good point. So you're a pretty good trader. I know you've been trading for a long, long time. You know what you're doing for sure. And sometimes it's just about the stats and the probabilities too, where like a really good trader could still fail FTMO because of the time limit, because of the rule with drawdown and stuff. So it shows that it's not a rule like if you fail, you're necessarily a bad trader, or if you pass, you're necessarily a good trader. There's a lot of luck involved and probabilities too. So that's a good point. Yeah,
there really are. And I think that the time pressure, for me, I did feel that pressure. Sometimes you can sit on your hands for 3 or 4 days and there's just no real decent opportunity. Maybe the markets are just quiet, or maybe they're just too volatile, the conditions are just not right for you. And as a trader, one of the things you must learn to do is be patient and wait for the right setup. You can't be forced to trade every day. And then if you go 3 or 4 days, you haven't done a trade, you haven't made any money, you're thinking, wow, I'm running out of time, I've got 2 weeks left, I've still got to make, 6-7% or whatever it might be. That's when the pressure sets in, that's when you start making mistakes. So I think removing that time limit really gives people an opportunity to actually just trade. Exactly. So the risk, you can always play with the risk, reduce it or increase it as you wish, but the time limit is something where you are really stuck with it and it adds pressure to you for sure. I actually wonder, to be looking at it as a business model, it must work quite well for these companies because I think the failure rate must be high because people are under pressure to make, to ask someone to make 10% in a month without losing more than 5%, it's a big ask. Yeah, especially if you're a day trader who trades a lot, that could be easier. But if you're someone who takes a trade a couple of times a week, like for me, I'm sure I will never be able to pass FTMO just as a swing trader because I'll just be risking it. I'll have to put more risk in some trades. I'll have to increase other trades. I'll have to maybe try to kind of push my luck a little bit more than someone who days trade. But still, it's a tough game for sure. That's why it works so well. Put it this way, I don't, I know that I couldn't make 10% every month, in a year. It would be too much to ask. So to ask someone to make, say, right, pick a month, make 10% that month. I think it's stressful for sure. Anyway, we'll see. But how are people doing with your funded account? We launched it a few months back. I think we have only a few guys who passed it. Most of them are still like in progression where they try to pass it. But this comes down to the point that a lot of traders who take these funded accounts, they are still new to it. Like they're not prepared to take it yet. Right. So if you look at the failure rate of these people, it's probably very high. If you look at failures of people who are more prepared, like people like you, who've been trading for a while, they know what they're doing, it could probably be higher, but it really depends. Okay, and so people basically are taking too much risk. They're trying too hard, is that what you're saying? Yeah, trying too hard, trying to do it too early. They have no strategy. They just heard a few lessons on YouTube, take a funded challenge, and it doesn't work out too well for them. Right. So. I bet it's a good learning experience though, because the thing is, you have to, even if you do have a long period of time, you still have to, you have to get your discipline in place. You have to learn to be patient.
Yeah.
You have to wait for your setup. You have to have a strategy. Otherwise, you're just not going to survive. So all the things that I teach, and I'm sure you teach too, this is a great way to actually learn the discipline, because, with your own money, it's easy just to be indisciplined and throw it around, and you might get lucky, you might not. But when you actually have to stick to those parameters, otherwise you fail. I think that's certainly a good way to learn the discipline. Might be an expensive way, but it's a good way.
But this is one thing I realized when I was training for investor like a while back too, is that the fact, some people see it as like a lot of pressure, they don't want to do it. But for me, it was more like a job. I was treating it more like a day-to-day job. I had to perform, I had to do the right things, had to kind of follow my plan. And that helped me to kind of stick to it more than if I was just trading for my own account.
So you found the discipline of actually trading someone else's money. It made you more disciplined.
It's more of a job, yeah.
I'm not very good at trading friends' money. I just worry too much about losing the money. So I stopped doing that a while back.
Well, this brings us to another topic of like being able to understand like what works for you in trading, because a lot of people are trying to copy different approaches they hear on YouTube or somewhere else. Like they could watch your videos, they want to copy you, but trying to find your own way and like making your own path and doing what works for you more is definitely tough for new traders.
Yeah, and there's lots of factors involved. Yeah, I think people do that when they first start, and well, in some ways it's amazing because, like you say, you've got so many YouTube channels out there teaching so many different things. So really, you can get so much information for free when you first start trading. But then maybe you overload too. There are so many different strategies. Maybe people, they try one strategy for 2 or 3 weeks, and if that doesn't work, they move on to the next strategy and the next strategy. I think it's really important to focus on one thing and get good at it. And stick with it.
How do you figure out, do you think it's about kind of sticking to one thing, or is it about like finding what works best for you?
It's definitely about finding what works best for you, because we're all different. We all have different lifestyles. We all have different challenges. We all have different responsibilities. If you're a guy in your 20s and you don't have children and school fees and mortgages, and then you can afford to take your time. You can learn. You don't need to make money. When I was trading in my 20s on the trading floor, I had big P&L swings. And it did affect me, but at least I didn't have to go home and, face the wife or, pay the school fees. If I lost 50 grand in a day, I was like, okay, well, that's terrible, but I can go in tomorrow and try and make it back. So yeah, it depends who you are, what your responsibilities are, and your time horizon, and also how many hours a day you actually have. This is one thing that my subscribers talk to me about. A lot of them have their own businesses, they have jobs, so they can't look at the phone or the laptop all day, every day, and they have to really fit it around. They may only have 3 hours in the evening.
How do you make trading take less time? But did you have any tips on that? Because I know you're not looking at charts every day. You're doing your stuff and it takes an hour or maximum 2 a day and stuff. How do you kind of reduce that trading time every day?
So I'm not a scalper. I don't have time for it, and I'm too lazy. So what I do is this all started because I run this service, my signal service. So I have to be up in the morning and I have to produce. I look at about 20 different markets, and so I'm just trying to find low-risk trading opportunities. So if I see something, it might be we're in a bull trend, the market's pulling back, I'm looking for a trend line and a fib level, a moving average, somewhere that tells me this is a low-risk opportunity. We're in a bull trend, it's a good support level, I'm going to try this trade. I might risk 20 pips, try to make 40, 50 pips, and that's all I'm trying to do. Now that, because I'm looking at it on maybe a 4-hour chart, that level isn't going to change during the day. It might change tomorrow or the next day, but for today I can leave the order in, I can go away, go about my day, come back and see, did it hit my level, did I get in, and if I did, did it hold above my stop, and did it go and hit my target, and I don't have to nurse the trade. That's what's great about digital trading. I was thinking about this the other day. On the trading floor, you couldn't automate your stops. You couldn't automate your target and go off and have a coffee. You had to stand in the pit and just wait and wait and wait. And of course, if you were not disciplined enough to hit your stop, or the market suddenly, someone else came in and had a big sell order and took out all the bids and you missed it. But these days with digital trading, you can just set your parameters. You can set, forget, go away. And this is why people are lucky these days that they can do that, and therefore take advantage of that. Put your stop loss in, put your target in, and then go for a walk.
Then you walk away. Yeah. But at the same time, it's the fact that now these days with all these platforms on your phone and everything, you can easily manage it as much as you want.
True. So there's a fine line between managing it well and then over trading and looking for opportunities when maybe they're not really there. And boredom trading, we all know, I'm sure you've done that, I have. You know, you think you're missing out on an opportunity, you've sat there for an hour, and you're doing something, or even worse. I mean, I don't do this anymore, but I used to do it. I'd be like, right, I need to buy gold. Gold's in a bull trend. I want to be long gold. So it goes up. You miss it, you don't buy it. It goes up so much by the afternoon, you think, well, it can't go up anymore, so I'm going to short it now. Before you know what, you're short into a market that you wanted to be long all day long, and it's just impulsive because you think it's gone up so much, well, I'm going to gamble on it coming down, and there's nothing really telling you that it's going to come down. So, this is why you've got to be disciplined. Learn to sit on your hands, put the phone down.
Good point. But that's something I find interesting with your trading style is you're entering based on levels and you're not really waiting for any kind of confirmation to enter. Like you just set your entry. And to me, doing that would feel like so weird because I'm used to like waiting for the candlestick to show me that price will reverse or price will go in that direction.
Yeah, and that makes a lot of sense.
Yeah.
I just wrote a blog post on it, actually, why you should or why you shouldn't. So for me, it's a balance between if you wait for the candle confirmation, then the odds of the trade failing are a lot lower. So, you're like, okay, everything's lining up. We've hit the support level. We've got a bullish candle on the 30-minute chart or whatever it is you look at. And it looks like now the move has started. And I really understand that. For me, the risk reward then blows out a little bit because, of course, your stop is probably a little bit wider than it would be if you just hit it bang on the level. So that's the trade-off. Do you want to have more certainty that the trade will work, or do you want to have a lower risk versus your target? That's the choice you have to make.
But then if you enter on the levels trade with your kind of entry, then you don't know where to put your stop loss.
Well, what do you mean? If I wait for the confirmation candle, then
if you don't wait for the candle, because if you wait for the candle, you can put a stop loss below the low, for example.
True.
But if you don't wait for the candle.
Okay. What you're saying is, it's hit a support level. Now you've got a bullish candle, so you just put your stop below the last bullish candle. That makes perfect sense. And actually, we've been trying to build an algo on that basis, but I must admit, it's not easy.
So how would you put your stop loss if you enter and you don't have any candlestick to give you a...
What I've been used to doing is looking at the bigger picture on the 4-hour chart, the daily chart, whatever, deciding that this is a big support level. So I don't know, let's say it's 1860 in gold. I've got 2 or 3 different reasons for that to be a good support level. So for me, I can have a really low risk trade there. I can try and get in at 1861, 1860. I can have a stop at 1855. I could have a 5-point stop and I could be looking at 15, 20 points potential profit. So I could be looking at R3, R4 possibly. Whereas but you can still do that with the candle strategy that you're talking about. But what would frustrate me is if it breaks the hour candle or whatever that you're based your trade on, but then hits my support level and bounces. Then that could happen too. There's no foolproof system, is there?
Yeah, because what I've seen a lot is that even if you put a stop loss below the most recent low in that range, then you could still have price kind of go a little bit below that just to kind of return.
Yeah,
and that's the issue. Yeah.
So there's no foolproof method.
Yeah, but I definitely want to test and explore more the way you do things because it's interesting for me to kind of just set it and then you don't have to really place any trade during the day. You can just do it in the morning before you do your other stuff. So that reduces the having to come back to place trades and stuff. So
again, I'm a lazy trader. So that's maybe why I do it more than anything else.
Yeah. You were saying like the fun thing I was saying is the fact that I tried to develop an algo didn't work the first time.
Yeah.
It took me at least 5 years to make it work.
5 years to
the way I want
make your algo
to the
work.
way I want to do it, like all correctly, all automated. So we begin with the alerts at the beginning.
So should we talk about this because this would be quite interesting.
Yeah, of course. Yeah, it's recorded. So yeah,
okay.
Well, definitely. So
tell me about that.
Yeah. So at first it was only alerts. So I had like a very basic setup. It was basically a break of Bond, which you can easily decode. And then an engulfing candle. So we look at like a close beyond the previous high of the candlestick.
So initially it was a breakout strategy, your algo.
So it's basically a reversal. Break of the Bollinger Band, coming back within the Bollinger Band, and then engulfing candle.
Right.
Then that was it. But then I had to figure out because like you cannot trade all of these. You got to figure out like is it the right context, right condition.
Right.
So I would look in the morning at the chart. I would look at my zones. I would maybe like note it on in like a notebook somewhere. Yeah. Then I would look in the day if I had these alerts. Do they fit these criteria? Or do they fit the zones I have in my charts?
Okay.
That was like for the first 2 years.
It's quite a lot. Yeah.
Yeah.
It's a lot to digest.
Yeah, then I was able to eventually code it to get the screenshot of the trades to confirm if it was at the right level and stuff. I'll have the parameters of the algo sending me like the entry, the stop loss, the exit. So I could even do it on my phone if I wanted to.
Right.
If I was traveling.
But initially it was just an alert system.
Yeah, only
it
an
didn't
alert.
execute.
No, exactly. I had to put it myself manually after. Then I got tired of this a little bit because of the fact that alerts are really good, but like if you're on a plane or you don't have Wi-Fi, you can't place trades.
Yeah.
So then I had to kind of find a way to automate it more.
Right.
So yeah, we had a way to either do the zones manually that way,
right,
or we could like do a simple Excel spreadsheet and put in the zones, like the price for the different zones.
Yeah.
So for like a support, we have a lower level, higher level for the support.
Sure.
Like
so
a buffer.
Basically, what I produce on a spreadsheet every morning. I've got my trade levels.
Yeah. Then we put this into the algo every week.
Right.
So every week we could tweak it if you want to.
So you say you worked out the zones manually?
Yeah, manually, but putting the price into a spreadsheet.
Right.
For the algo to be able to read.
Exactly what I do. Yeah.
Yeah. And then that would mean that if the algo was within those zones and had it set up, you could take the trade.
Okay.
If it was outside, you could not take the trade.
So the algo would also look for confirmation in the zone?
Yeah, in the zones. From
exactly
the Excel
as we
file.
just talked about. Wait for the candle.
Yeah, exactly.
Okay, that's exactly what we're trying to develop.
Yeah.
I should just buy it from you. It'd be a lot easier.
Yeah, that's the ideal version because then you want to find a way that is there any way we don't have to update this like spreadsheet every week of the zones?
Yeah.
So we had to look at we try a whole like a lot of different ways with like indicators on trading view and stuff that could help us with the zones, but most of them didn't work really well.
Right.
So we just ended up going for like fractals.
Okay.
And having the price like these buffer zones with fractals.
That was the easiest way to identify the levels.
Yeah. Okay. And usually on bigger time frames too. So let's say we look at the fractals on daily charts.
Right.
And then turn the 4 hour or the 1 hour chart.
Right. Okay.
So that's kind of how we look at it now, and this takes trades automatically.
And it's working.
Yeah. Then we have other filters for like filtering for the trend.
Right.
Usually we trade only counter trend. Works better.
And the filters you do manually?
No. These are filters in the algo.
Oh, okay.
That look for like a slope with the moving averages or something.
Right.
Yeah, these kinds of things. We have a filter for volatility also, which is more complex.
Right.
And we have a filter for market noise.
Wow. So it's taken you 5 years to get there.
Yeah, 5 years.
That's interesting.
Yeah.
I'm going to have to
so
take
it's
a
a
look
long
at
journey.
it.
Yeah. But it's the thing with algos.
Give me a free trial. I want to go on it.
Yeah, for sure. But that's the thing with algos. Like you find a solution, but then it's like it's okay, but you can always make it better.
Of course.
Then you got to add more stuff over time. Then you kind of go and over the years make it to something good.
Can you try to over perfect it though? Because markets are constantly changing.
Of course.
Yeah.
Yeah, so the idea is we don't want to change the settings all the time. We want to have like a clear set of setting, and based on some pairs, we might adjust a little bit the parameters, but not too much. So we try to kind of have the same basis around it. Like we're not going to change like all the Bollinger Band settings for different pairs and stuff.
Right.
We might just like enable if a pair is more volatile, like the pairs like JP and ZD or something, are more volatile. We might add the volatility filter to cut that noise or something.
So you can actually there are different variables that you can adjust depending on which market you're trading.
Yeah, exactly.
So something for gold might be different to oil or a Forex pair.
The logic is still the same, the principles are still the same, but the pairs are acting differently anyway.
And how does it cope when, say, a market moves from being in a bull trend for a nice 6-month period and then suddenly trading sideways and building, it could build a flag for 3 months? How does that work?
Yeah, so we usually look for trading only when it's sideways usually, or at least reversals, because we catch these better.
Okay.
So when it's going in trend, we have a rule where we have the trend filter.
Right.
So if price takes a trade within the trend, it won't take it.
Right.
So it's only because it works better against the trend.
Oh, that's really interesting. I'd love to have a look at it.
Yeah, of course. Happy to give you access to that.
You might have a new customer.
No, it's definitely cool.
Yeah, so I could actually use that on my own levels, could I? If I decide to continue to place the levels.
Yeah, you have to adjust the code because it's a different strategy, different rules. But yeah, you should be able to tweak it, make it work.
Interesting. Okay.
Yeah.
I'll definitely have a look.
Yeah, I mean, algos is such a time saver too. When we talk about like reducing the time just spent per week on trading.
Yeah.
Because even if I don't trade now, I still have a couple of trades a week taken.
Really?
And it might not be as many as I want to take.
Yeah.
But at least it's like a good basis to kind of stick to.
Okay, yeah, that would interest me because I'll be honest, I've been doing this 35 years. I don't want to sit in front of a screen all day. Yeah. I like getting up in the morning. I like looking at the markets. I like looking at the levels. That analysis side of things I quite enjoy. But come 10 o'clock, I really don't want to then go, okay, right, done the analysis. Now I'm going to sit here for 8 hours and stare at the screen. I've got other things to do and I've got other businesses. So I would like to find an automation solution for that.
I was going to ask you, what do you think makes a good level? Because like you've got all these people finding levels in the charts and some work, some don't. Are there differences to what makes a good one or a not so good one?
I keep it really simple. I've tried so many things over the years. I've been trading for 35 years, but I've only been doing analysis for 15 years. Say only, it's quite a long time. So I've tried everything really, and I tried really hard, not just for myself, but when I started in 2007, I had customers. I had like Deutsche Bank and Morgan Stanley. So if anything, that adds more pressure to get things right than when you're actually trading your own money, because you really, well, firstly, I wanted to get paid at the end of every month. And secondly, you really don't want to look an idiot. You don't want to let these guys down. They put their faith in you to find good levels for them. So, obviously it was an experimental. I was only still learning when I managed to get their business. But I tried everything, and I've really just narrowed it down. I keep it so simple. It's trend lines, it's Fibonacci, which I use a lot. It's moving averages, but I only use the 50, the 100, 200 and 500 period. I look at the daily, the weekly, the 4 hour, the 1 hour, and that's pretty much it. It's really very simple. I keep an eye on the slow stochastic, but then it's a combination of candle patterns, candle formations, moving average crossovers, using moving averages as support and resistance, combining that with fib levels. That alone actually is enough. I don't believe in using a lot of indicators. I think that really confuses things.
Yeah. I know what we discussed last time when we did the video together is that you like to have the confluence, like multiple factors, different time frames are lining up, or different tools. It could be a trend line and then Fibonacci and something else.
Yeah.
And that gives you more confluence.
That's the dream trade. When you look at maybe the 1 hour, the 4 hour, and they're both lining up. To me that just means people looking at different time frames are all seeing the same thing. So the guy who's trading the daily trend will be like, okay, yeah, we're hitting the 100-day moving average. I think I'm going to buy it there. And the guy looking at the 4 hour chart will be looking at something else. But they're all seeing reasons to buy.
This is more of like a discretionary kind of trading style too. Like there's a bit of flexibility into it.
It is very discretionary. That is true. Well, that's the thing with technical analysis, isn't it? You could put four experienced technical analysts in this room, show them the same market and say, have a look at gold. And, I could be looking at my time frame. Someone else could be looking at something else. Yeah. They could be looking at Elliott wave or Gann lines, and we could all come to completely different conclusions. So it's an art, isn't it? It's not a science.
And this is where I think you have probably a tough time sticking to something like very processed, like very clear cut, very like focused. You probably perform better with like something more discretionary. Like some traders might be the same way as you. They like more discretionary, but they follow people and traders who tell them they need to focus to a process. They need to follow the process, follow the plan. You don't really like have a plan. You have an idea of like what you're going to do.
That's true.
But you don't really have a plan.
I'm winging it all the time. Yeah.
So people have to understand there's many ways to do things.
Yeah.
And even if a process doesn't work for them, there's other ways to go about it.
Oh, there's a million different ways to trade and hundreds of different ways to look at a chart and pick your levels. Or I'm a levels trader, but there's so many different ways to scalp. I know people that very successful traders, they only trade the open or they only trade the close. They trade for 1 hour a day. I don't know what they see within that hour, but they make a terrific living. But they're so highly specialized. And I couldn't begin to tell you how they do that.
But that doesn't mean that because it's discretionary, you can just like decide, one day I'll use the RSI, next day I'll use this tool, this indicator. No. So you got to draw the line in between. Yeah,
what I do works. I know that, and it's consistently worked. And my subscribers have been with me for years, so something must be working. But yeah, I keep it very simple. It's not something that there's no secret to it. Anyone could learn what I do. Dead simple.
It's like you have that set of tools, you can combine different tools together, and then you always only use those tools to analyze.
Yeah, it is a lot of experience though. It's like anything that you've done for a long period of time. You just kind of, you're sensing things that maybe you're not even aware of. You're subconsciously thinking, well, I've seen this before. I know what's probably going to happen here. It's like when you drive a car, you don't drive down the road thinking, I'm going to turn left. You're not really conscious. You could be thinking about what you're going to do tomorrow, but you're just driving along. Because you're so used to doing it, and that's a sort of stage I've got to with analysis. I can just glance really, and kind of know. I can glance and I can know if there's an opportunity there or not. Put it that way. Then I can investigate further if I think there's an opportunity.
But you wouldn't take a trade if it's only like one level with no other confirmation that you might have a resistance or support there.
No, I wouldn't purely buy because it's hit the 38.2% fib. There'd have to be more to it. Yeah. for sure.
I think that's the biggest difference with a lot of traders. That a lot of new traders are trying to like have this secret or this like fancy tool that works all the time.
Yeah.
Like they might use only Fibonacci, think Fibonacci will work all the time when they use these levels. But you doing it where it's like you combine different things together. That gives you the edge.
I combine simple stuff, but I wouldn't, just because we're in a bull trend and just because we pull back to the 38.2% fib would not be a good enough reason for me to enter a long position.
Yeah, people love these like simple solutions where like, oh, every time it's this, you do this.
Yeah.
But there's like a bit more to it than just that.
I'm afraid there is.
Yeah, it's a good point. What would you tell someone who wants to start and sort of become more discretionary? They want to just like create their own style. Can they, like, where should they kind of go and pick the tools that they want to use to trade? Okay,
well, I think the time horizon is probably one of the most important things. You know, am I going to be holding trades for 5 minutes, 1 hour, you know, an afternoon or overnight? So then, of course, your focus then is on what time periods should I be looking at my charts. From there, it is a question of how many hours a day have I got to trade, or when will I be trading it? Is it morning? Is it before breakfast? Am I going to be doing my analysis while I'm having my coffee and then putting my trades in and then checking them 2 hours later when I get to work? Or so, you know, that also depends on how big your stop losses are and which levels you're going to look at and over what time period and that kind of thing. And for me, the most important thing is if you don't have a strategy, if you're trying to develop a strategy, don't do it with live money. You know, demo accounts are everywhere. You know, there is no hurry to learn. You're not going to become a great trader in 6 months or even in a year. So just get on the demo account, try to think of it as real money and take it seriously and practice on a demo account. You know, you could try and develop 2 or 3 strategies on the demo account perhaps, but if you go straight into it with real money, even if it's only like $500, you know, it just takes that emotional element maybe into the trading too quickly. You need to decide a strategy first. How am I going to exit? You know, I spoke to a guy the other day, really nice guy, been trading for a little while. And I said, okay, can you clearly define your entry and exit strategy? He said, oh, well, you know, if I feel it's going up, then I'll buy a bit, you know. And I was like, that's not an entry strategy, you know. And you don't have, if you haven't got an entry strategy, I'm pretty sure you've got no exit strategy, because if you don't really know why you got into a position, you're sure as heck not going to know why you're going to get out. You're just, you know, trying to go with the flow and using gut feeling, and I just don't think it's not a strategy.
Do you feel like you have any period of the day where the trades tend to be more triggered? Is it more like doing the US sessions here at night in Asia, or is it more London? Do you feel like that's more active?
Not necessarily when my trades would get executed more often, no. But I used to find that trading the European morning was easier, probably because it's less volatile. So that might be something for newer traders. Maybe you know, if you're in Europe, obviously it's not going to work too well if you're in America, but for newer traders in Europe, maybe trading the European morning, you know, because of course America's closed, and I think volatility increases a little bit more when the US opens, because we've got something leading us.
Yeah.
I think Asian session tends to be, well, obviously quieter for European products anyway.
Yeah, it's also depending on, like, some people like action better. They like to be like in the actions. People like to be more on the side a little bit.
Yeah.
I know exactly. I perform better when I was trading in the Asian session.
Yeah.
Because it's a bit more calm, a bit more like relaxed, and
a
bit more clear sometimes. But it really depends, like, your personality, I guess.
It does, but also I would warn people when they start trading, don't get into trading for action. Don't get into trading for entertainment. You know, that's when you're going to overtrade. That's when you're going to cause yourself a lot of problems. If you want to use trading as a form of entertainment, just like going to the casino or going to the horses, that's fine. But don't lie to yourself and tell yourself that you're going to create a business out of this. Decide, I'm going to gamble $100 a month. You know, I'm going to see how that goes. If it's gone after 10 days, okay, that's it. Me for the month. I've had my entertainment. I'll do it again next month. You know, or if you double it, great. Take your 200, walk away. But decide, am I going to do this for entertainment and fun in the evenings, or am I actually going to try and create a business out of this? Because there's a whole different set of rules when you're trying to trade for a business and for a living.
What do you think goes into a good trading business?
Business is the key word. You've got to treat it as a business. You know, if you set up a shop, you've got your opening hours and your closing hours, and you know you're managing your stock, and you've got to do that. You've got to have a plan, and the plan has got to be, there's a micro plan, which is managing every trade properly. Right, why am I going to, what am I going to trade today? Why am I going to trade it? Okay, I'm going to be a buyer of gold because it is in a bull trend. So, it could come down to this support level, as I've said before, and these are the reasons why I'm going to buy. You've got to have reasons why you're going to enter a trade. And then you've got to have reasons why you're going to exit. So if I'm wrong, if the market breaks below, for example, this moving average, I'm going to realize that I'm wrong about this trade. I'm going to exit, and I'm going to set a stop loss in that trade, because obviously we can't trust ourselves as human beings to actually execute the stop loss trade. We might be distracted, or we might just be, when you first start trading, it's all about you just can't face taking the loss. So one of my rules is you find your entry point, and you know why that is. You find your exit point, which is either your stop loss or your target, and you've got to have a reason why you've chosen those levels. It can't just be random, because then you don't have a sustainable trading strategy. If you're just using random or your gut feeling or whatever else it might be. And then from there you build it out. What's my target for the day? Okay, I think if I can make 2%, I've had a great day. I'm going to quit trading, and then I'm going to go start again tomorrow, get up, do my analysis, look for 3 or 4 trading opportunities. Hopefully at least a couple of those get executed. So you need a target for the day, not only a profit target, but a loss target. If I lose this much money for the day, I'm going to quit. I don't want to get myself into a big hole. I want to be able to wake up tomorrow, fight another day. Obviously, you've got it, capital preservation is key. You ain't going to trade if you've got no money in your account. And then you target for the week. Okay, if I make, 7% on the week, I've had a great week, I'm going to quit. It might be Thursday, but I'm going to quit. Or if I lose 4% on the week, I'm going to quit. Obviously, you should always make sure you don't lose as much as you intend to make. So set these parameters, and have this sort of circuit breaker thing where I'm not going to get too greedy. I've done well, it's Thursday. No one wants to make a big loss on a Friday. That ruins your whole weekend. So have that sort of business plan, and I think having targets is really important, because otherwise, how do you know if you have done well? If for example, I've used 7% as an example. Well, if you hit 7% and that was your target, you could think, great, I've done well. Everything's gone the way it should have done. I've done my analysis. I've executed the trades properly. I've hit my target. Bang, I'm done. Now, if you can make 7% a week, obviously you're going to be a phenomenal trader. You're going to make 28, 30% a month. That's going to be phenomenal. Okay, those numbers are probably not realistically achievable in the long run, but you see what I'm saying. It's a business. Treat it as a business.
I think the other thing that most people don't think about is they need a plan to increase their capital, because most people don't have like the 100K, 200K to trade with necessarily full time, and it means they gotta have a plan to increase that. A lot of people expect that the only way they'll build their capital is by trading, by making profits. They look for big targets, big returns, which of course they take more risks and they lose more capital and stuff. But if you have a plan to increase your capital, like when you're going to take a profit from challenge, when you're going to get some funding from other people, for example, then that could be a good way to do it. Or even if you get funding from your job, from your day job, and then you invest it back in trading, you know how much you save, how much you put back in your account, how you're going to grow that capital over time.
Yeah, and just obviously compounding works so well. If you can just be steady. The problem is with trading, the temptation is of course to hit the ball out of the park, go for the big wins. Sometimes it happens. I'm not saying it doesn't happen, but it's not really a sustainable strategy to go for the big. I think I said this to you before. One of the worst things that happened to me is when I was 23 or 24, the ERM crisis, probably before most of the viewers here were born. It was 1992, I think it was, and I got lucky. I was on the right side of some big trades, made some big money. The problem is, for years after that, all I wanted to do was hit the big one again. I never hit the big one. For the rest of my life, I never hit it. And I spent too much trying. I lost my discipline, and for a number of years there, I didn't really make any decent money.
That's a very good point. Very good point. And in the same way, a lot of people are a little bit desperate for trading. They have motivations. They want to be able to live the lifestyle like you or like me, for example. And they have this desire to get there. And because of that, they kind of push things too much, or they try to force things a little bit too much, and that doesn't work out too well for them. That's
a really good point. Yeah, with trading, it's get rich slowly. Really, it's get rich very slowly, and it's not about, for God's sakes, if you are doing well, forget about trying to show off all this stuff on social media. The guy with a Lamborghini and the pots of cash and all that. Forget about that. That's just clever marketing. You know, I'm sure there are people out there who make so much money they're driving Lamborghinis, but really that's not what's important. It's keeping your head on the ground, keeping your feet on the ground, keeping your head level. The only thing you're battling against when you're trading is your own brain, your own mind, because the market doesn't care what you're doing. The market will take your money if you're indisciplined, if you're not patient, if you haven't got control of yourself.
The cool thing is, in business, people wouldn't be usually doing business all by themselves. They have partners, they have people they go around with, they have even maybe accountants or something. In trading, people try to do it all by themselves, all on their own. Do you feel like adding other people to it could be a good use of, or like a good way to get profitable faster?
Good question. Never even thought about it. I've always traded on my own. So set up a little trading team, 2 or 3 people. You share the responsibilities, and
Could be.
actually, that could really work. And I tell you, I had a conversation very recently with someone about this, and it was working very well for them because one guy did the analysis. So, for example, it was me that was picking the levels, but the other guy was trading. And I think that sort of division worked really well. It took some of the ego out of the trading. You know, because especially guys, we're egotistical, aren't we? We don't want to be seen to lose. So that way, the responsibilities were shared, but the job roles did not overlap. So if you're doing the trading and I'm doing the analysis, you know, as long as you stick to what we've agreed, and as long as I, you know, continue to hopefully generate some good levels, for example, that could be a winning partnership. Is that the kind of thing that you mean?
That's pretty cool. I never thought of it that way.
Yeah.
So kind of like a business work, they have the operations, they have the finance, they have this department.
Yeah.
And then you can retrace back if it doesn't work, you know exactly what's the issue.
Yeah.
Because you know it's that guy, yeah, if you take the trade correctly, then it's because the analysis is wrong or because the trading is wrong.
Yeah.
I like that.
Division
it's a good
of
idea.
labor.
Yeah.
Let's do it.
it's
Come
good.
on, you and me.
Yeah. Could be a good idea.
Right.
No, it's very,
Yeah, I'd never thought about it before, and I met someone the other day, one of my subscribers, and was talking about this, and I said, that's a really good idea. And also, I think it takes the pressure off you. If you're not responsible for everything, the account management, the risk management, the trade management, you know, the analysis, execution, everything, then I think it's quite a good idea.
I know you often go around, you travel around the world a lot, especially recently, you go to meet other traders. Is this something you do because you enjoy it, or what do you feel like there's benefit to this?
Yeah, I really enjoy it. I've even got on my website, anyone, you don't have to be a subscriber. You can go there, you can click on in the menu, you can book a mentor session with me, 15 minutes, and I'm meeting some really nice people, interesting people, and I'm having interesting conversations like the one, you know, we just had. In 35 years, I never thought about building a team that does a different aspect of the whole trading process. So people, you know, young people, very smart people are coming out with these great ideas. So yeah, I really do enjoy that aspect, meeting people.
Where are you heading next? Any place you want to visit eventually, or?
Where am I going next? I haven't actually travelled internationally that much this year. I went to Dubai earlier to watch my son play football. I'm travelling around Thailand quite a bit. So I'm trying to get your lifestyle. So every weekend I'm in a hotel somewhere, and I'm really enjoying that. But yeah, I would like to travel internationally a bit more. But you know, you don't have kids, do you? I got kids, so I'm confined to school times. Yeah, and my kids are old enough now that they tell me what to do. They tell me where we're going. I don't get to make the decision.
That's cool. So where can people find you? They're connect with you, reach out after YouTube. Where can they see your work and learn more from you?
So my website's the best place to find me, which is daytradeideas.co.uk. I'm on Twitter, which is daytradesignals. Those are probably the 2 best places to find me. All my contact details are on my website, so literally phone numbers there. So if you want to call me up, we'll have a chat.
Awesome. I'll leave a link below for that website, also in the YouTube channel below. People can check you out there. You have a lot of good content. You publish a lot every week, so it's pretty awesome. And hopefully they connect with you. We got to catch up eventually too again. After we get to the next milestone, it'll be good. And look forward to see how you progress and how we progress together.
Yeah, sounds good, mate.
Awesome.